you very much and good afternoon. I appreciate it is towards the end of a long day, so thank you very much for joining us and being here. I'm Andrew Steadman. I'm the Chief Product Officer at SBS, and you may be asking, who are SBS? We're a technology provider to the financial services industry. We have over 1,500 clients running banks, large-scale lenders across 80 countries. So we're a world leader. We want, though, to talk today not about the future of AI, but we want to talk about whether we can really trust that future. So we're really at an inflection point, we think, in the industry. So at this point, I'd like to introduce Hani. He's a world-leading scientist on the topic of AI. And I want to really pose a question to you. If I think about your perspective of the research and your experience, sort of start with a big picture. There's a lot of talk about explainability. And to me, that sounds like an answer. So I guess, why is the topic so hot? What is it that's changed that makes explainability in AI so critical for financial services?
So simply, explainability means the ability for us to understand how the artificial intelligence model is working, and if it produces any kind of output that you are able to understand, analyze, and explain this kind of output in our natural way of understanding. Artificial intelligence models now are able to price loans in seconds, detect fraud in milliseconds, and it is doing this in more accurate, faster manners than different kind of human being terms. But there is a huge issue. In the 2025 McKinsey Global Review, Banking Global Review report, they mention and they have found that 62% of all financial institutions executives cite explainability or lack of explainability of AI as the number one barrier for the wider adoption of artificial intelligence. This is quite worrying. And of course, regulators are taking a very strict stand on this. We have heard in the previous talk about the EUI Act, which basically is very strict about this, and they have mentioned that explainability is a financial obligation if artificial intelligence is going to take any kind of decision affecting human life. In the UK, we have got the AI Select Committee mentioning that it's unacceptable for artificial intelligence to take decisions where it does not provide a satisfactory human understandable explanation, not only statistical sharp values or something like this.
Okay, Hani, so let's start simple. Why is explainability such a challenge in the financial services industry?
Well, what really changed in the recent years that artificial intelligence became fantastically more powerful, but also dangerously more obscure. It is this kind of complexity that makes it giving us very high accuracy, but at the same time, it also increases the number of the level of interpretability that we are encountering. This is not acceptable in financial services simply. In financial services, we have got AI models which are going to allow people to get loans. It prices, it predicts how market moves, how capital is progressing, and it is basically the inability to explain these models get us to lose more than compliance. Simply, we lose trust, and this is a huge issue. According to the Bank of England 2024 Model Risk Management Report, they mention that AI opacity is a huge issue. It undermines accountability, and it also can increase system risks. And we have seen this happening. Back in 2019, if you guys recall, the Apple credit card issue, Apple launched a credit card which basically was built on a very accurate model. It worked very well during testing. When it was launched, it was found that it basically gave the female applicants half the credit limits of the male applicants. And even this has been noticed by Wozniak, who's basically one of Apple Apple founders with his own wife, who basically shares exactly the same kind of financial profile. This was mentioned by Apple as a technical glitch, by the regulator as discrimination. However, it's neither of these. We are dealing with a model that cannot be easily understood, analyzed, or augmented by human beings. And if you are just basically going to rely on data-driven systems, we have got the golden rule: garbage in, garbage out. Data will be always biased, it will be always incomplete. So the inability to deal and put our explainability on this is no longer an academic ideal. It is a necessity and a matter of survival for the regulator, for the bank, and most importantly for the human being whose life is mainly affected by these decisions.
So I guess that brings us to the obvious question in terms of, does explainability mean I lose sophistication in my models? Are we trading intelligence for clarity?
Well, this is a myth. So I have been working in the area of artificial intelligence for 25 years. And I remember, and I think this is the case till now, banks are comfortably using logistic regression models. Simple models with a simple weighted sum equation. It gives a relatively not a fantastic accuracy, but it's explainable. People like it because you can stand in front of the regulator and justify a logistic regression model. But of course, when deep learning came and we are able to ingest millions and thousands of inputs and get a fantastic accuracy, people thought that, okay, you cannot actually balance explainability and accuracy. Actually, this is not true at all. A joint study in 2025 between the International Bank of Settlements and University of California at Berkeley have found that explainable AI models that are explainable by design, are able to give you a high accuracy of prediction, closer to what you are able to get with opaque box models. So in this case, you no longer have to say that I have to deal with obscure, very complicated models to get a high accuracy. You can get a very good accuracy, but at the same time, you'll be able to sustain your old transparency. And this will be very important for the wider adoptions of this kind of models and how it can be taken forward.
So it's not just about explaining the maths, it's really about explaining the mind of the model.
Exactly, because if we are able to deal with explainable AI by design, you are embedding in this kind of models reasoning capabilities. And in this case, you are able to have what is called disciplined intelligence. You get the artificial intelligence to think like a scientist, but respond like a human being, respond like a banker.
Okay, so let's get practical. All right, we think here, perhaps we've got some CTOs in the room, chief risk officers. How would I approach explainability? What is it that works and what doesn't?
So basically, if we speak about predictive AI is, of course, the most dangerous one, the one that basically is ingesting data and trying to generate from data decisions like predicting events like credit decisioning, fraud, and so on. There are mainly two techniques. What's called post hoc explainability, where you train a very good deep neural network, gives you a fantastic accuracy, but you have no way to deal with the model beforehand. You cannot ingest any kind of human ability. Anything that comes in the model might reflect in the model afterwards. For this, the two main techniques used are, one is called Shapley and the other one is called Line, which basically give a best guess on how this kind of models work. Some people say it is like reading smoke signs after a fire. So for example, Shapley can tell you that the most important feature is income, but it will not tell you that it is high income combined with high time at address that give you a high accuracy of prediction. If I go here and show Shapley value to everybody in the conference, they will not actually know what I am speaking about. Okay, it's very, very, very theoretical. The other technique is try to use explainable artificial intelligence by design, where you are able to generate from the data if-then rules, which can be easily understood, analyzed, and augmented by the human being, and there should be small number of short if-then rules, and in this case, you get the model to speak the human language. In this case, you are no longer relying on data-driven approach, because let's face it, data will always be biased. If I'm going to train a model to predict bankrupt customers from non-bankrupt customers, 99.99% of the customers are going to be non-bankrupt. So we cannot just hide behind the fact, clean your data, clean your data. Your model needs to be explainable, because with explainability comes the opportunity to deal with the model and augment it with the human knowledge. And in this case, you go with two sources of knowledge: data-driven knowledge and human expert knowledge. These models are fantastic because when you give a prediction, like for example, the credit score is 600, it thinks like a human being, pros and cons. 600 is your score because you have got a high debt to income ratio, but at the same time you are fantastic at repayment. In this case, you speak plain language, which you can easily track, and you are easily able to justify the answer. Plain language, human sense.
So these models, it's not just about their predicting, but they're actually justifying their prediction.
Exactly, and this is extremely important because in this case, you no longer have an obscure AI. You have got a colleague that speaks your language and you can trust. Let's deal with numbers again. In 2025, PwC Responsible AI report mentioned that explainable by design AI models can decrease your regulation cost by 20% and increase your trust by 15%. In this case, you are dealing with an entity that you can trust, and therefore you are able to have clear decisions that is going to be beneficial to the organization. And let me end up by a very important statement. Any technology, any revolution, any change will always have losers and winners. And with explainable AI, you will be in the winner's side. Again, justified by number, the 2025 McKinsey Global Banking Review mentioned that banking sector can make $200 billion by 2030 by just, and here they said, qualify this, by applying responsible AI. Responsible AI means it has to be trustworthy, it has to be explainable, and it has to be fair. Without it, you are going to risk having bias, and you are going to risk getting rejections. With AI, with trust explainable AI, you would get acceptance, and most importantly, you are going to get trust. Finance is a human being industry, either for the regulator or for the end user. Trust is going to be the new currency, and of course, this was going to apply for predictive AI or generative AI as well. People trust what they can understand.
So we heard the prior speaker talking about the AI Act. And if the AI Act scares you, perhaps it's because you're not being responsible enough right now with your AI to begin with. So we think in finance, explainability it's not just about compliance. It's really your conscience as a lender, as a provider of financial services. And you can't just bolt on that transparency. You have to build by design to explain. So if you think about trust as your currency, really think about explainability as a new credit line you're getting. We at SBS, we have a very clear stance on this. Financial institutions, they need AI to be part of their infrastructure, not black boxes. And so that's our entire approach, is explainable by design. So you need models that can be audited, traced, defended, and trusted by both the regulators and obviously your clients. So if you want to see how to approach responsible AI, come find us, have a chat, and we'll share with you what we're doing, because we're building that future now. Thank you.